You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday. It is a rainy, overcast, clouds hanging low in the sky, touching the mountaintop as I stare out the window of Studio A. Just paint the picture. Welcome to the show. It is a beautiful day. Anytime it rains in Phoenix, except during the monsoons when it gets very violent, that's no fun. But this is nature. It's beautiful. This is not 120 degrees in the shade, so we like it. All right. Hey, thanks for joining us. If you're returning, welcome back. If you're here for the first time, a very special welcome to you. So glad to have you with us. If by chance you cannot see the chart I have up, that would be the S&P 500 Emini Futures. And if you'd like to see the chart, go to our homepage at cfrn.net. On the right-hand side, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds. You'll be able to see the charts, participate in the discussion, all that every day. Okay? All right. And you'll get an email about an hour before the show each day reminding you that the show's at an hour. Now, if you missed the show, you can go to youtube.com/CFRN, and there you have it. Or, going forward, you can go to Telegram and just type in Emini Radio, and there it is. Now, if you're away from the office, working off a cell phone, tablet, and you want to enjoy the live broadcast, go to youtube.com/CFRN/live. youtube.com/CFRN/live. There you go. That's all you need. Now, this chart I have up, S&P 500. Oh, and thanks to the good folks at YouTube for carrying the show. Okay. S&P 500 Emini Futures. We've been talking all week, moaning and groaning about, well, we had the holiday Monday. Okay, we can drop back to Friday. We had the big move up on Friday. Right? Okay. Then we got into this area here, which happens to be positioned right between these two weekly trading zones, which we've... Tuesday, I think I might have said we could spend the whole week inside, and we almost did. And we still are. I'll show you. We got into this area, and we were able to break below it and break above it, only to come right back to it. It's a very, sticky area in here, which, if you take a look here, yeah, daily chart, S&P 500. Okay. Oh, back fall of last year, we had a high right here. Then we put down a leg to the downside, bearish cross right there. A leg and a retracement, which put in a swing high right there. And then a leg, a lower high, another lower high, and then the recovery on the 26th of December. We talked about this yesterday. We talked about it almost every day because it's a really important dynamic. This move to the upside since the 26th of December is virtually unprecedented. It's quite a move. Now, let's look at this. Got a high here, a lower high here, and so far a lower high here. Now, a retracement just back to the shallowest Fibonacci retracement, 24%. Look at where that puts us. 2684. When I first shared this last night in the Telegram channel, or when I shared it last night in the Telegram channel, I said it's about 100 points below us. Okay, so right now we're sitting at 78, and this is 82. Okay, now if we just pull back to the BBC, then we're looking at about 2730. So that's about 50 points below us. So we could drop 50, we could drop 100. Now, this is big picture. Now, look at the small red candle there on the daily. That encompasses this. Okay. Now, all week we've been stuck here in the middle. Okay. We broke below, sucked right back in, broke above, sucked right back in, grind, grind, grind. And then yesterday, with some perhaps hope in the air that the Fed minutes would somehow unlock this thing, put in a leg, retracement, sucked right back in again. And then here comes the Fed minutes. We pop, and then we drop. Where do we drop? We drop right back into this area. Then we put in a leg and a retracement. A leg which spiked above the 91.92. Leg and a retracement, and a leg and a retracement. Now, one could say, that we're still stuck in the middle. That's what it looks like. Okay, now don't forget that belongs there, but let me show you this. Okay, last night on the Globex Open, I cautioned everyone in the Telegram channel. I said, let this thing drop another 3 points, 30 points on the Dow. We'll get a nice pullback to the BBC, and then potentially there's something to the upside, but be very careful because all things considered, even on this move here, we're still tied to this, and this kind of shows that. However, the last thing in the rearview mirror was a bullish cross, and so as long as price is above the BBC, we expect higher prices. Once it gets below, we expect lower prices, and so here we have our bearish cross and the drop. Now we dropped right through that area only to pull right back up into it. No surprise, right? Now what we really like to see, just as we patiently waited last night for this pullback to the BBC right here, love to see that same dynamic take place right here, and that may or may not happen. We've already gone through that 11:30 growth spurt that we get every day. Growth or decline. It's when the London markets close, the European markets close, and also when the live training room closes. That 30-minute period between the room and the show, you usually see some kind of movement. Okay, today's Dr. Tom Day. He'll be with us at the top of the hour. I'm going to scoot out of here right now so Michael can do the recap. And we got a partner. We have a workshop tonight, partners and passport holders. So everyone, we will see you there. Let me go over the numbers just real quick, put things in perspective. Okay. Now these will be the cash markets around the world. Start here in the US. Back to the futures. Back to the futures in just a moment. That might be a good program segment name. Back to the futures. It's got a ring. Dow currently down 82 points. NASDAQ down 17. S&P 500 down 7.5. Russell 2000 down 5.5. In the commodity basket, crude oil down 23 cents, trading 56.93 last. Gold down $15.50, trading 13.3240 last. In the Asian markets, the session closed for the Nikkei up 32 points. Shanghai closed down 9.5, and the Hang Seng was up 115. No movers, no shakers. Continuing with the small numbers that we've seen all week. The FTSE closed down 61 points. The DAX was positive by 21, and the CAC was at the 0 line. So Asian markets mixed, European markets mixed, and here at home it's a big red radio day. This Thursday, 21st day of February 2019. Michael, if you're ready, take it away.
Okay, I am ready. I am ready and waiting. Today is Thursday. Do you have Dr. Tom coming on today?
Yes, we do. He'll be here at the top of the hour.
Excellent. Okay. Yeah, I got it. Okay. And for all you guys who were in the room this morning, that gold trade at the end of the session that I put it on up here at 33.8. And I have 10 ticks locked in right now, and I'm just going to let it run. Okay. That doesn't count toward what we did in the room, even though I put it on in the room at the end. Yeah, here. Here we are. Okay. Good afternoon, everyone. Today is Thursday, the 21st day of February 2019. 21st day of February 2019. If you have not taken a free trial with us, go to the homepage here at CFRN.net, and over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, or any one of these down here, free 5-day trial, proprietary indicators for free. If you click on any of those, you will eventually be brought to this page. And on this page, all we ask for is your email, your first name, and how you found us. Hit the submit button, and you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click the confirmation link, we don't know that you took the free trial. So you got to do that. Spreadsheet. Okay, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 21st day of February 2019. We made 4 ticks in the euro, 10 ticks in crude, and 13 ticks in gold. And again, that's not counting the plus 20 that I'm sitting on right now. I have 10 locked in, but there's another 10 available. That put us at plus $255 a contract this morning. This morning it took 28 minutes and 3 trades to get to the goal for the day. At that point, we were up $222.50. And we took a total of 7 trade opportunities today. So on the month now, we're at $1,972. That's over 14 days, averaging $140 per day. Oh, that's right. It's a short month this month. We have 1, 2, 3, 4, 5 business days left. On the year now, we're up $4,003. That's over 33 days, averaging $121 per day. Again, that's one contract, 2 hours per day. One contract, 2 hours per day. Okay. Now, on the gold, let's see, it had some movement here in the pre-market. We had a bunch of news events come out in the pre-market today. And we had this one trade right here on the gold where this was where I was going to get my goal for the day. I had put a target at plus 9 ticks, which would have been exactly the goal for the day. And then something happened and it just tanked and it slipped me 12 ticks. So I ended up with 12 ticks of positive slippage. I got 21 ticks here. And then I stopped out over here, gave 8 of them back. Now at the end of the session this morning, at the end of the session, it was right in here. We had a short off the BBC right here. And it went up and it tapped where my stop was, but it didn't stop me out. And that's the one that I'm still in right now. You see? I'm still in right now. I could lock in 20 right here if I wanted to.
Samsung just announced 4 new phones.
We want to see this green line get down into the cycle.
That includes
and when it does, maybe I will lock in
S10e,
something
the
more.
Galaxy S10,
okay.
the high-end Galaxy S10 Plus, and then
so I'm gonna put that back over here. And let me see if Bert emailed me. I wanted to remind everybody that there is a meeting this afternoon at 2 p.m. Eastern that Bert is going to be doing. Let me see. Did he email it to me? I don't think so. Valerie, did you happen to copy down the link to Bert's thing this morning?
Yes, I have it.
Oh, great. Can you post it somewhere? I don't know.
Yeah, we'll do. Yeah.
Thanks.
I can do that.
Thanks. Yeah, I usually copy it. Post it. Can somebody type something into the question box? Just type anything so Valerie can post it right in there. She doesn't have to send it to me. Thanks, Brad. You can just post it right there, Valerie, on Brad's thing. Okay. Okay, so the next market is the euro. Now, in the euro, we started out here. We got 2 ticks on this one and 2 ticks on that one. And then it got kind of choppy, up and down, and then we ended up with a break even here toward the end of the session. Since then, there has been nothing that you can do. Okay, and on crude, let's see, on crude, we had started out with a break even here, and then a +2 right here, and we missed that one. And we picked up 8 here to get us to plus 10. We missed that one and that one. And during the break, there was a short right here. And then it changed directions, and it didn't actually hit the BBC there, so there was nothing you could do right here. And yeah, it would be a short right here too. Well, actually, no, it's not really trending here. Not really trending. We have higher bottoms and lower highs. So we wanted to establish a trend before you get back into that. But I had said to everyone, you know, at the beginning of the session this morning, to look for price to get up to this area right here, this little green shaded area. Now, when I had said that, I think price was down in this area here. And it got up there, it stayed there a little while, went back up and tapped it again, and again, and again, and again, and again. And if it does turn up right here, that's probably where it's going to go. Okay. Yeah, that link that Valerie just posted in there is 2 to 3 Eastern. That's Bert's going to be going over all the stuff that I go over in the morning, plus other stuff. You know, he talks about the little traps that people frequently fall into and stuff like that. So if you're falling into any of those traps, you should really go and watch that with Bert this afternoon. Okay, and that was Crude. And now the ES, we didn't do anything with. I had drawn in this range because it was range bound after like the first 15 minutes. See, we had sort of a trend here, but the slingshot wasn't giving up any trades, and then it got range bound. We had this huge area that it was just having trouble getting out of, and still is. And again, that's one of the things that Bert will probably be going over this afternoon. Okay. Okay, so we want to see this green line get all the way down into the cycle, because right now we're sitting at, well, here I can lock in 20 ticks. Okay, but we want to see the green line get all the way down into the cycle. And I'll move that over to the side. Now that 20 ticks, I didn't count that toward the room, even though I put it on in the room. Because I didn't take it off in the room. Okay, back to the spreadsheet. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. On the 6E, that was gold. Oh, right here in this move. Brad. The one that I had, this is gold. It's even better than the 6E. $3.50 a tick better. Okay. So we made 4 ticks in the euro, 10 ticks in crude, 13 ticks in gold, and not counting the 20 that we got locked in right now. That put us up 255 on the morning. And today it took 28 minutes and 3 trades to get to the goal for the day. At that point, we're up $222.50. We took a total of 7 trades this morning. So on the month now, we're up $1,972. That's over 14 days, averaging $140 per day. And on the year, we're up $4,003. That's over 33 days, averaging $121 per day. Okay. Okay. If you have, the heck is that? If you have not taken a free trial with us, go to the home page at CFRN.net, and right over here in the right-hand column it says 5-day free trial. Apply.cfrn.net. Click on that. Okay. Or you can click here, or you can click here. Any one of those. Click on any one of those, and you'll be brought to this page, where all we ask for is your email, your first name, and how you found us. Hit the submit button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that link, we don't know that you took the free trial. So make sure you click on that link. Okay? Okay, and with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Dwayne is not ready.
No, I am. I'm right here.
Oh, okay. Okay.
Okay, recap of the recap.
Today it took 28 minutes and 3 trades to get to $222.50.
That's a good bingo.
And that's it.
All right.
That's it.
All right, John's going to join us here in a little bit, and then Tom joins us at the top of the hour.
Okay.
If you have any questions, put them in the chat box. So here we go. Price still trying to pull its way up to the BBC here. Now, word of caution, same word of caution that I put into the Telegram channel last night is, even though we had this nice move to the upside, first we had this, and then this, and we got this, and we got this, but do we get out of this area? Because see, if we hit the BBC and it does act as good resistance, and we do start to put in another leg to the downside, which is what we would anticipate at this point. That's what we expect until proven otherwise. How do we prove it otherwise? Price starts closing on the other side of the BBC. We start going up to challenge this weekly trading zone again. Okay, so as we come down, the issue we have, of course, is this. And you can do one of two things. You can say, okay, I realize that because of the positioning, this is not my highest probability trade setup, but I'm going to take it. Calculated risk. In trading, risk cannot be avoided. In fact, risk should be embraced, because that's your doorway to opportunity, and mine, and everyone's. So now we moved right through it, almost like it wasn't even there. Almost, right? Now we pull back. This is the high probability move to the downside. A couple different ways you can do this. Let's see what it's going to do. Let's let it pull back, and let's see how the market reacts, and then we'll talk more about it. Okay. To put things in perspective one more time, here we are on the daily. Resistance right across here. This could be the 1, 2, 3, 4th lower high in succession, and the shallowest Fibonacci retracement takes us back to 2678, which is 100 points below us. Must have misdrew my fibs on the other one. Let's see. That's 84, 81, 78, 81, 84. It's an area, and that's something to keep in mind. It's an area, and the area actually extends from the BBC all the way down. Price could get a toehold anywhere in there. If it comes all the way back to the 24, that's a 100-point drop. What if it pulled back into this area here, which is basically right at the 38. Now the 38, that's still a pretty shallow retracement. I'll put that in perspective here in just a second. All right. So this area here, low, low, support, 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 and this little move up, support, continue up. So what if we come all the way back here? Now that takes us from 2780 to 2620. That's 160 S&P points with just a 38% retracement. At 1600 Dow points. Okay, so what's the likelihood that we could get a 38% retracement? Well, let's look over here. In fact, I think I got, this might be a better chart to do it on. Okay. All right. So from this high up here, yeah, we use this. Okay. All right. So from this swing high back in September to this swing low in October, did we get a 38% Fibonacci retracement? We did. Sure did. 38%. So the likelihood here, good. Now if we go from this swing high all the way down to this swing low, swing high to the swing low, did we get a 38% Fibonacci retracement there? No. We got a 62% Fibonacci retracement. From this high to this low. If anybody has any questions on this, put it in the chat box. If you're on the GoTo software. Oh yeah, by the way, hey Michael.
Yes, I'm watching.
Did you, on the GoTo interface, I rolled that thing back on my end. Did it roll it back on your end as well?
It did, yeah, it did.
Okay, just want to make sure.
Yeah, I was happy about that, actually.
Yeah, that thing, it looked like something from, it looked like the set of the dating game. I don't know, with all
it was awful.
Bright colors, and I don't know. It just, yeah, I didn't.
It was awful.
Not a fan. So I told it to not only roll it back, and it says, well, won't you try it? And then I clicked the, don't show me this again.
Yeah, thank you.
But then
no,
the only way,
much more intuitive, the old way.
The only way to get out of that interface, though, is to ultimately click maybe later. So
really,
yeah, that's okay.
For everybody who was in that gold trade from the end of the room this morning, I just moved my stop to plus 30 ticks. It's still going down. Just wanted to say that.
Very good. Okay, so up here, guys, from the swing high to this swing low, you got a 62% Fibonacci retracement. From the high to the low, retracement. Okay. Now back over here, we talked about a 24% retracement from this low to this high. That would be a 100-point drop. A 38% retracement, like we got here, just from this low to this high, that would be 160 S&P points, 1,600 Dow points. But what if we came all the way back to the 62? Is that possible? Sure, anything's possible. That would take us from, oh, call it 2,800 to 2,500. That's 300 S&P points. That's 3,000 Dow points. Am I predicting or prophesying that we're going to sell off and get a 62% retracement? No. If it happens, though, how would it be any different from this high to this low to this 62% reverse fib? It's not any different. It's the same. Low to the high. So you might want to jot these numbers down, keeping in mind that they are an area. 2680 on the downside. If we continue down, 2600, 2610, 2620 area. And then at the 50, $25.55, 62, 2,500. Again, not predictions, but possibilities. We don't know from the daily perspective if this thing's really going to roll over or not. once we take out this low right here, once we get below the weekly trading zone below us, and that's this one right here, right here. Once we get below that, then we might start to think that maybe there's a little something going on here. Maybe this move has legs. And will we fall straight down? No. We'll have pockets of support on the way. That's last week, the previous week's zone. So we can expect to find some support in this area here, 35.40. That gets taken out. But all these old zones down here, and any of these could turn up as support. But you can't have too many lines on your chart. And the reason I say that, not that you shouldn't have too many lines, but that any one of these could turn out to be support on a move down, is because important prices in important areas are almost always tested. Take nothing else away from this daily broadcast. Take that, because it will serve you. It'll serve you well. All right. Okay. Now, is that it? Let's check. John here yet, Michael?
No, he is not.
All right, I told him.
I'm watching for him.
All right, thanks. Okay, now that's pretty close. We got swing high was 27.80.75, and the BVC is virtually at 27.81. So there you go. You know this has the potential to be support, as certainly this does, because here's a dynamic you might not pick up. What happened over here? Why did buyers not come in? Why did buyers not allow price to get all the way back to the swing low here before coming in? It's a great question. Well, the last time you had an opportunity to buy at this price, we moved from 27.65 to 27.95, so that's 30 S&P points, 300 Dow points. Anybody that missed out on this move for whatever reason, or only caught part of it, given an opportunity to buy at the same price, obviously they not only took advantage of it, they didn't want to get left at the altar or left at the train station, so to speak, so they came in early. And that will happen. Sometimes price will come back and test support or resistance to the tick. And based upon the market dynamics, I mean, we're not the only ones who've had to deal with this snarl all week. All traders have. Big accounts, little accounts, you name it. And current company excluded, they're just looking for some action. And hopefully this week has taught you, if it's taught you anything, it's taught you one thing, that just looking for action, that's not really a good trading strategy. What we had last night was probably one of the most discernible moves that the market has given us all week. We waited 3 hours for this thing to pull back, and it gave us an up close, and the next candle opened at 27.85, and we ran up 10 points. Higher than that, we ran up 13 points to 27.98. We had a Concierge Trade Alert at 27.94, I believe it was. Which took us up to 27.98. Let me check, I think it was. Oh, if you want a, go grab a screenshot, go ahead. Okay. Now, I had a little bit of news I thought worth sharing, and I think I need to show you this if I can. Okay, it's an unlikely love story. Okay, the Bitcoin symbol, which has been deployed in a shortcuts app to aid Siri with command execution, is available on the Google keyboard on iOS devices. Apple's native keyboard does not have this functionality. Let me show you what they're talking about. Now you got to remember that a very large percentage of the world population is still scratching their head going, I wonder if this thing's going to catch on, stick around, get legislated out of existence. That's still the majority of folks out there. Maybe not you, because you've been exposed to things like this. When Google puts it on the keyboard, that's got to say something. A Reddit user explained how to produce the key manually. That's very complicated. I don't think you want to know that. For Windows, another user proved just why an Android symbol would be very welcome indeed. Okay, it's unclear, here we go, why Google has opted to add the Bitcoin symbol to Apple's interface and not yet to that of Android. Apple's penchant for privacy is a good fit for Bitcoin users, yet its wallet-gobbling insistence on proprietary software is in direct contrast to Bitcoin's, and Google's for that matter. With most privacy-minded individuals opting for Android over iOS, it's thus slightly ironic that the Bitcoin symbol, a currency arguably geared towards the privacy-conscious, is available exclusively on iOS. Even more ironic is the fact that most iOS users tend to use the native Apple keyboard as opposed to the Google version, pointing to Google's permissions requirement as an adoption deterrent. So, if brand recognition is any indication of eventual mainstream acceptance, then Google's addition of a Bitcoin currency symbol to its native iOS keyboard is a sizable arrow pointing in that direction. The symbol now features on the Google keyboard currency strip alongside the dollar, euro, yen, pound, Korean won, Russian ruble, Indian rupee, and the old Abe Lincoln cent symbol. It's alluring to fall into the honey trap that this spells significant news. The tech conglomerate, which under the guise of parent company Alphabet, co-founder and president Sergey Brin once admitted that it failed to be on the bleeding edge of blockchain, is finally coming around. That Alphabet is going Bitcoin and then just maybe crypto, especially in light of Google's AI defining Bitcoin as a collapsed economic bubble, or making the crypto industry the butt of a launch joke. After all, in the period 2012 to 2017, Google placed second as the most active corporate investor in the blockchain space, and rumors regarding a cryptocurrency of Google's own making have been circulating for a while, but that seems far-fetched, with Brin admitting as recently as last year that he doesn't know a whole lot about cryptocurrency, save for an amateur Ethereum mining rig he set up with his son. While the addition of the Bitcoin currency symbol certainly shows Google isn't turning a blind eye on the world of crypto. This latest news is unlikely to signal Alphabet's foray into the land of Cryptopia. Instead, for a company that makes billions out of listening to us ask questions, it's only natural that they would give us what we want. According to Google Trends, the search query, "What is Bitcoin?" was the year's top search request in the US and the UK in 2018. A company that, in layman's terms, owns the internet can only stay on top by doing what it does best, playing host to the globe's digital hive mind. And if that collective mind wants Bitcoin, then Bitcoin is what it shall have. Google has a significant effect on the cryptocurrency market. Unlike other movers and shakers holding the stock market in the palm of their hands, it's primarily a content ledger, whether that content is organic or paid. Yet when the Bitcoin price dropped by 11% after Google announced it would follow in Facebook's footsteps and restrict the display of crypto ads in 2018, a ban that's since partially been lifted, it drove home the reality that Google has more of a say in crypto land than many would like. Time will tell what cascading effect the addition of the Bitcoin symbol will have in the minds of everyday iOS users. And of course, when Android users will get to greet the new family member. Now, I've said this for a while. There are bank tellers now that you can go to, teller machines also, that you can, bank teller machines, and also the third-party ATMs that you see at the gas station or the QT or 7-Eleven, Circle K, wherever you go. You may not have it in your neighborhood, but that doesn't mean they're not out there. Lots and lots and lots of them. Now, many people use these tellers, these ATMs, on a daily basis, taking money out, maybe putting money in, and they don't know from Bitcoin or cryptocurrency. But what are they seeing? Every time they log in, they're seeing that little symbol for the Bitcoin or the Ethereum or whatever that particular vending device offers. And so you get conditioned. It's like they talk about kids with the violent video games that they get conditioned to this level of violence and then they take it out into the real world. Maybe that's true. I don't know. It makes sense to me. But pretty soon, the person that you ask today, what is cryptocurrency, after they made 100 trips to their bank's teller and subliminally, almost, if you will, seen that information displayed, and the brain, builds neural pathways and it starts to associate the two. Oh, bank, cryptocurrency. And it just sort of homogenizes, all comes together. It's a marketing campaign. They don't really expect you to buy anything yet.
Sure.
Not yet. Excuse me?
John's popped in. I just
Okay.
want to let you know.
All right.
I'll open up a second. Okay. I don't want to interrupt you.
Hey, John.
Sorry.
Welcome to the show. You there? Okay. All right. Just leave his mic open.
Okay.
Okay. Tom should be
I should
here
have just texted you.
any minute. I'm sorry?
I said I should have just texted you in the message. In the
I got my phone shut off because it just won't stop ringing. So there.
Okay. Well, John's mic is open. Dr. Tom's not in yet.
Okay. All right. So, when you go to the bank, when your bank starts to display it, that's happening at lots of banks in lots of countries, but we may be slow to adopt, but we will. People in Africa were way ahead of the United States when it came to paying for things with their phone. They were paying for things with their phone back when we had flip phones. It's a big business there. Big. All right. I had another little bit of news. I know some of you are world travelers. You get out, you get about. Bitcoin and cryptocurrency in general. This is about crypto remittance. If you want to send money overseas, internationally, Bitcoin and cryptocurrency in general can get money from sender to receiver extremely quickly and at low cost. If you're new to decentralized peer-to-peer currency, it's worth familiarizing yourself with how it works. From there, one can choose which cryptocurrency you intend to use as a conduit for the fiat cash. Bitcoin Core, BTC, Bitcoin Cash, BCH, Ripple, XRP, Ethereum, ETH are all options that are available. After selecting your desired cryptocurrency, the next step is to choose a wallet which can store it. Cryptocurrency wallets are essentially software programs that store your public and private keys and interface with various blockchains, allowing you to monitor your balance, send and receive money, and conduct other operations. There are different wallets to choose from: a desktop wallet, which would be downloaded and installed on your computer, an online wallet, which runs from the cloud, or a mobile wallet. By far the most popular option, as they can be used anywhere while on the go or sitting still. Other options include hardware wallets, which store a user's private keys on a device like a USB, and paper wallets, which refer to a physical copy or printout of your public and private keys. Both are easy to use and provide a very high level of security. More information on choosing the best wallet can be found on the Telegram channel. I'm going to put this link in for you. Now, the simplest method for beginners is buying BTC on local Bitcoins and then using it to send cash abroad. That's extremely popular in developing nations. You simply need to open an account, search for people selling BTC in your country, and then go ahead and make a bank transfer to the seller. Platform is very secure and uses an escrow mechanism to hold funds, which means the coins can't be released until both parties agree. Once the buyer has the BTC they wish to send abroad, they can send it to their contact's crypto wallet, where they can then sell it or perform the same process on localbitcoins.com, but in reverse. So if a person wanting to send money from the US to Venezuela wishes to use this method, they would find a buyer in Venezuela after having bought BTC in the US, then sell the BTC and receive fiat cash into a Venezuelan bank account.
Hello.
Hey John, welcome to the show.
Hi there. Sorry I got interrupted by a few things.
Yeah, okay. Tom's due on here in just a few minutes. So if you want to,
yeah, I'll just do a quick wrap because it's quite important, especially what you and I talked about earlier this morning. Once again, it looks like the pullback is fairly short-lived. You know, we were down about 40 or 50 points on the Nasdaq, and I could see that I kind of took a shot at it. And after selling yesterday and the day before, we sold all the stocks at Monday afternoon at the high, and we sold the indices yesterday, and you know, they're down today, but they're not staying down. And the Dow is probably the weakest, but the rest, you know, the Nasdaq in particular. Now look, you know, we've been fooled a bit before. Market goes back up near the highs and then turns down again. You know, we've got stops in just in case it goes a bit lower, but right now it's a pretty good rebound. And you know, there's a lot of stuff going on today. They're having meetings with China. The beans, the soybeans, and I put a buyout on the grains. I think we talked about the $9 area as being very important. That got triggered. The wheat also, all the grains are acting really well, and it looks like there's a deal close to being announced on the grain side with China. As you know, Boeing has been phenomenal. We got into that under 300 or somewhere down around the 300s right after Christmas. It recently broke 400 on the upside. It's been a spectacular rise, and it's inevitable. As you know, we've been saying all along that Boeing is more than likely going to be the biggest beneficiary of a trade deal with China, because in order to, you know, as President Xi has said, you know, they're willing to buy hundreds of billions of dollars worth of U.S. goods to straighten out the deficit, to lower the deficit, reduce the deficit, and obviously Boeing's the prime contender to do that, and so obviously the stock, our idea behind that, our thinking behind that, has so far been proven correct. We are hitting new all-time record highs on Boeing, which is pretty incredible, pretty impressive. And for a Dow stock, I mean, remember, we got absolutely massacred in this December rout in the market, and here we are in Boeing going to new highs. We're in new highs in Xilinx, which, if you remember, we started talking about Xilinx when it was about 80. Well, actually, we talked about it last year when it was a whole lot lower, back in the days when we were talking about Maxim being a contender or takeover target. We had Maxim, Xilinx, and IDT, I think, was the other one. They have risen dramatically since then. We've got Keys, KEYS, and I noticed that they're starting to get talked about a lot more, these stocks, as being there's a sort of a suite of semiconductors that are the leaders of this new pack, if you like. Not the NVIDIAs of the world, although NVIDIA is acting a lot better. Another good thing that's happening today is FedEx is rebounding, and the transports in general are actually very, very strong. And another thing, I haven't looked at it in the last few days, but I think the New York advanced decline line has made new all-time highs again. That is as good as it gets. That's really, really bullish. I mean, anytime the transports and the NYSE advanced decline are making new all-time highs, there's always a risk in being long, obviously, but that's usually a pretty good formula to be buying dips and generally being bullish, having a bullish bias on the stocks. The thing that's a little bit of a shocker today is the gold got knocked back down. We're down about 16 at the moment. Not a particularly big deal given how much we ran up, but I wouldn't really want it to go much lower than here. It's around about 1330 at the moment. The platinum's pulled back a bit too, but not particularly drastically. The silver's come back to 1580. We're actually we broke out from the 1325 level. Could we test it? Yeah, we could. As long as we bounce off somewhere in this general area, as long as we bounce and turn higher from here, I think that the metals are going to have another leg up from this. Not necessarily immediately, but as long as we can hold in this range. If we pull back any further than this, I'd be a little bit less bullish on the metals. But
on this last leg up on the daily chart, we're approaching a 50% fib retracement right here at 1327.28.
Yeah.
And the 62 down below is at 1321.22.
Yeah,
we could test
could come back
areas,
in that general range, and if it is a 62%er, it should hold. It should hold in around where the previous high was, and I can tell you this: the time when we break out above 1350, that's when the fireworks are going to start with gold, because you're really breaking that 1350 level for the third or fourth time I think now, and that's usually the fourth time is is the real deal kind of thing. And this is a multi-year deal, so that's a resistance level that once broken, we could have. I really believe we'll have a $150 move from there, taking it maybe even 200, taking us all the way to about 1550, and possibly fairly swiftly. The other thing that's been, we called it on this show, if you remember, the very day that the oil was down, or the oil complex was really at the lows. Remember, we said this is a pretty good point to take a shot at the long side,
right?
And reverse the shorts and go long. And ever since then, the crude has risen kind of magically, actually, and all of the energy complex has performed pretty spectacularly. I mean, we were in the 40s, low 40s, remember? And we hit 57 this morning, 57. So that's a pretty riveting performance. and don't think it's over yet. Remember I said the first quarter going into Memorial Day is always a good time for energy, and I would say the surprises are still on the upside in the energy and probably in the market too. The lumber, which we talked about when it ran up into the low to mid 400s, recently pulled back to 385 or so.
Yeah,
it's on its way.
Existing home sales hit a 3-year low today.
Yeah, probably the lumber market probably anticipated that number. It's going up on that news today, so this could be a potential turning point. We also put a buyout on orange juice recently, around about 115, I think, or somewhere. I can't see if we got that low, but I know we got in somewhere near the lows, and that's heading back up again. Coffee, remember we talked about the coffee, and I did say, if it kind of broke down again, it would definitely not be good. And it looks like we're going to head down to lower lows on the coffee. And there's no bottom in sight yet. But I would pay a lot of attention to this coffee. It certainly looks like, if it's going to make a proper bottom, it's probably going to have to take out the recent lows, which I think were in the low to mid 90s, so which we're basically back to. So I would say if we got back to about 87, 88, that would be a point where we might see an upturn in coffee. I'd keep a real sharp eye on coffee this year because it's a long time since we had a frost. There's also some problem, it doesn't appear so at the moment, but there was a problem with some kind of a blight or some kind of a problem with the coffee trees in some countries. But it's amazing. The 30,000 Starbucks stores around the world haven't exactly had a bullish effect on coffee. It's however they're managing to supply, an insatiable market, thirst for coffee worldwide, without the price going up is extraordinary. I guess a lot of farmers have planted new plantations in, possibly even managed or financed by Starbucks, that has kept the price of coffee down. And I'm sure they're probably pretty adept at hedging and making sure that their source of revenue, their base, their core business is as competitive as can possibly be. So, however, if there is a coffee frost or something like that in Brazil, that comes around this year, and given the very extremely cold temperatures, the record cold temperatures we had in the northern hemisphere this year, it wouldn't necessarily be a surprise if that gets transferred to the southern hemisphere later this year, for the southern winter. And so I would be very, very on the ball. Look, with the coffee being under $1, it's almost, there's a limit to how low coffee is going to go historically, and so in terms of a hedge against some kind of a incredible upside explosion in prices that could occur in the event of a frost, this year rather, may be the year to take a serious, to probably go for options or something, be incredible leverage there, because believe me, if there's a frost in Brazil, the best one ever took prices up to about $4 or $5, $4.50 a pound, something like that. Or it was an incredible, and it was limit up for days, limit up for weeks. This is the coffee price, and we did that with the lumber last year. We nailed the lumber on this show, right from the lows all the way up to the highs. Limit up day after day after day, with these various things that happened with the lumber market, and we didn't do such a bad job at getting short, pretty close to the highs, if you remember. So there are some pretty big themes developing, all over the map this year. And the commodity, sugar's another one. Sugar's been creeping higher. It's not really accelerating yet, but if it takes 13.5, we could be heading up to the mid to high teens, and we start getting over 20. And then if you have a hurricane in Cuba later this year, that could have a incredible effect on the sugar market, which is long overdue for a really good bull market. And since gold, silver, soybeans, sugar, traditional inflation hedges are starting to get lined up, they're starting to align favorably. These are the sorts of things that can really create a very, very bullish environment. And even the grains, at a time, I've been watching this agricultural show for months now, and if you listen to these guys, every time they come on, they basically say, there's too many grains, too many beans out there. The demand from China has gone down. The only thing that is kind of bullish for grains right now was they did say that there's a problem in Brazil. I think the yield in Brazil is down and the crop's down. And if something happens later this year where the U.S. crop gets impacted, then you have this set the stage for a very bullish environment. And remember, a year after the peak of the market, in 2007-8, we had a record year in commodities in 2008 where grains went through the roof after being depressed for a number of years. It's a sort of a deja vu situation. And, you've got to be, with the way gold and silver are going, you've got to be looking at commodities all across the board this year as the plays.
Let me get Dr. Tom's mic open.
Okay.
Hey, Dr. Tom, welcome to the show.
Hey, nice to see everyone.
Good to see you. Your bright and shining face. It's raining here in Phoenix. Overcast, cloudy, clouds low in the sky. What's it like where you are?
It's hot and dry. All I can say.
Well, that's how it normally is here. So that's why it's such a big deal when they do get a little.
Hello, Tom.
Hey, how you doing, sir?
Pretty good. I guess you heard my bullish comments on gold.
Yes.
So, yeah.
I was listening with great interest because I've been my own calculations, but also other people that I listen to have been saying pretty much the same thing.
Thank you.
So I appreciate you.
Okie doke. Well, listen, I've got to bow out right now, so I'll let
okay,
you.
John. Well, listen,
go,
thanks very much, and we'll talk with you tomorrow.
You're welcome. Thanks a lot. Bye-bye. Oh, just one thing. Did you see that Merck bought a company this morning?
No, I didn't. Who'd they buy?
Yeah, you might want to mention it. It's just quite interesting. The stock was about $1.50, and they paid $4 for it or something. That's a hell of an increase. It's in the it's a immunotherapeutic type stock. So,
all right, I'll take a look at it.
Okay.
All right. So, Dr. Tom, it's been
Yes, sir.
a week since we spoke. It has.
Well, actually, it's been an hour since we spoke.
Well, that's true. Yeah, that's very true.
But at any length, yeah. It's been a week, so what's been happening with your week?
The market has been tied in a bit of a knot. We had the big run-up on last Friday, and then we opened Sunday night on Globex, and this thing just rolled sideways. We've been stuck between these two weekly trading zones all week, and we ran up and spiked it last night after we got the Fed minutes yesterday, where it popped and then it dropped. But we just keep getting drugged right back into this sticky little area right here in the middle. And so it's kind of been a non-eventful week from a market standpoint.
Well, from a crypto standpoint, it's been kind of interesting.
Yeah, Bitcoin's back up at 4,000.
Yeah, but also the JPM coin, the JP Morgan company, they've issued their own cryptocurrency. And this is just months after.
This is from the guy who said anybody that works for me that ever buys Bitcoin or sells Bitcoin, I'm going to fire him, right? Was that his word?
That's right. He said it was a fraud. He said it was a scam.
Yeah.
as he was making these comments, behind the scenes, his company was working on issuing their own coin. I don't know where this guy's head is. Jamie Dimon.
He's the bad boy of banking. You know, he doesn't ask permission. He doesn't need. He'll just pay the fine. He just does what he wants and pays the fine. Year after year after year after year. His bank has paid more in fines than all the other banks in the world combined.
Boy. Well, the reporting on the thing was kind of stupid, actually, especially from Bloomberg. You know, you expect to get good information from Bloomberg, right?
Yeah.
But the more I get to know Michael Bloomberg, I don't know how much control he has over the company, but at least he founded it. He laid down its philosophies. The less I'm surprised when they come out with bad information. But they said JPM coin will have a huge impact on Bitcoin before it came out. And then when it came out, it said the JPM coin pushed Bitcoin up. Well, if you look at the chart that they showed with it, the rise in Bitcoin took place 4 days later. And I guarantee it had nothing to do with the JPM coin, because the JPM coin is a stable coin. It has nothing in common with Bitcoin except that it is also cryptocurrency. It's going to be used strictly to transfer money between institutions. It's just an alternative to the Fed that's a lot cheaper. And it does show the value of the blockchain, but it's not a coin that you trade. It's not a coin that you or I could even buy if we wanted to. And it's
each JPM coin is redeemable for $1 US, which means that
right.
It is not as volatile as cryptocurrencies such as Bitcoin, and is what you just said. It's referred to as a stable coin, which JP Morgan has made clear its coin is not. This new digital token will be used for international payments for large corporate clients, securities transactions, and for larger corporations that use JP Morgan's Treasury Services business to replace dollars held in subsidiaries, and could perhaps be used for payments on internet-connected devices, according to CNBC. Would JPM coin simply be a digital currency rather than a cryptocurrency? That's the whole slant of this article, is that they should stop calling the JP Morgan coin cryptocurrency, because it really isn't. But it kind of is. So
yeah, there's going to be a lot of it's going to take a lot of work to really define cryptocurrency in the future. I'm working on a book on it right now, but the main thing is
you're writing a book or reading a book?
Writing a book.
Oh, okay.
I do a lot of writing. If people want to see the stuff I write, it's conservativetruth.com. conservativetruth.com. But in the strictest sense of a cryptocurrency, the JPM coin really isn't one, because cryptocurrencies, the whole concept behind them is being decentralized. And the JPM coin is so centralized that only JPM and their customers can use it. Nobody else can even access it. So transparency and decentralization are the two key watchwords of cryptocurrency, and this is neither of those. It is an indication that the blockchain, again, is gaining more and more power. If anybody wants to see the articles I've written on blockchain, which are going to be going into the book, they can contact me. But I think that it does show that the blockchain has many, many uses beyond just having a coin that you can use to buy things with on the internet, or a coin that you can trade. But again, in this case, it's a private blockchain. It's not publicly accessible. So they're both right. It is a digital currency. It's sort of a cryptocurrency, but if you're a purist, you wouldn't call it a cryptocurrency.
Google, on their virtual keyboard on iOS devices, it now has a Bitcoin symbol, which lends towards, you know, the mass adoption. Yeah, I just shared an article with the audience on it before you came on. That's what's happening there. And in France, we talked about this, I think, 2 days ago. You can walk into 10,000 tobacco stores in France. They call them tabacs, T-A-B-A-C.
Right.
But 10,000 of them, you can walk into 10,000 tobacco shops, and they carry other stuff, lottery tickets and soda pops and all this.
Tobacco.
Yeah, and tobacco. And you can buy cryptocurrency. You can buy BTC, you can buy, I think, XRP. I don't have the article right in front of me, but the point being is you go in, you hand over your fiat French francs, and you get like you would if you're buying airtime for a cell phone. You know, your burner phones. You got to go buy airtime for those. And so you buy this, and then you take it home, and you go online to the website, and you convert this. It's what you're doing is you're buying prepaid cryptocurrency. It comes in like 20 bucks, 50, 100, 200.
It's like loading up a prepaid debit card.
Yeah. But then you got to actually go to their website once you get home, and you've got to actually do the conversion and then move your crypto into a digital wallet.
Right.
So you kind of start the transaction in the tobacco shop and you finish it at home online. But that puts the ability to buy cryptocurrency at everyone's fingertips. I mean, it's there, it's on a shelf, I can hold it. And that facet right there, the fact that, oh, now I can hold it in my hand, it suddenly just became real. Because crypto is something traditionally you don't hold in your hand. Now, again, this plastic card, this debit card looking thing, credit card looking thing, it's just a placeholder. Yes, it has a code on it, a magnetic strip on back, or a series of numbers, however they use to identify it. But do you get that? You can hold it.
Yeah, I like it because the barriers to entry have always been the problem with cryptocurrency. All the hassles you have to go through to buy them from an exchange. So this can be big, especially if it's widely adopted. By the way,
can you see my screen? Here's the Google keyboard on an iOS device.
Now, is that only on new iOS devices, or is that a soft screen?
It's the Google keyboard. So let me open up Chrome. And
oh, you said iOS. That's Apple.
Yes.
It's got, yep, Bitcoin, yen, euro, and so on. The people that are going into these tabacs, or whatever they call them in French,
yeah.
One of the reasons they're doing it is because the euro is going to get pretty weak as a result of the Brexit. And so they're getting their money out of euros and putting them into a cryptocurrency that they think will go up. So they're protecting and having potential growth at the same time. By the way, thanks for putting that up on the screen. I've been trying to get the word out to everybody I know about this Saturday being a National Day of Mourning for abortion. Since Roe v. Wade was passed, 63 million babies now have been killed. That's, to put in perspective, that's 20% of the entire current U.S. population. So they're asking people to wear black on Saturday. to recognize these babies.
Okay. Yeah, I wasn't aware of that. That this thing was. Where's it being held? In New York
Well,
City?
it's going to be actually in Albany, New York.
Okay.
The event, but people all over the world can participate just by, they're asking people to wear black, to not shop. And if you have a business, close your business that day, because our tax money is being used against the Constitution and against federal law to pay for abortions all over the world, and even forced sterilization of people that they don't think are worthy of being able to reproduce. So it's a pretty serious thing, and if we don't shop on that day, it's going to make a little dent in the taxes. It's more symbolic than anything else, but we have to start somewhere. I mean, especially after New York passed this law that if a baby is born alive and is laying there on the table, then the doctor and the mother have a discussion about whether to abort it. Now, you can't abort a baby that's already been born. So they're calling it abortion,
I mean, what's the
but you're
time
killing
limit?
it.
When does it expire? When does it go from being one thing to just being, what it is, and that's murder at that point?
Well, they're trying to make it to where whenever they kill a baby, then it's okay. I mean, they're already doing it with older people if they feel like they're no longer useful to society and so on. They're pushing for euthanasia. They started with first trimester abortions, then second trimester, and then third trimester, and now they even want to abort after the baby is born. That's just a mind blower. So anyway, take a look at the article, folks. Read it, and if you think it's worthy, participate this Saturday. What I wanted to say about the euro is, we talked a few weeks ago, I think it was, about what I think is going to happen with the Brexit. If you remember, I mentioned that there's a good possibility that there be what's called a hard Brexit or a no-deal Brexit. In my opinion, that would be better for the UK because it would save them billions of pounds of money that they would have to pay to basically ransom themselves from the European Union. But it's going to cause confusion because there's so many interrelated trade deals and tax deals and monetary deals and so on. So it's looking more and more, according to the news I saw this morning, that there is going to be a hard Brexit. Everybody is hoping that there will be a negotiated Brexit, but the European Union is holding strong and saying we're not going to change this. This is our offer. It's kind of like with Nancy Pelosi and Donald Trump, both of them saying I'm not changing my position no matter what. Right. And they may.
And they both did.
They both did, yeah. But in this case, Brussels is so afraid that after a Brexit, there'd be a Frexit and so on. They're afraid that the European Union will break up, that they're doing everything they can to sabotage the Brexit. So Theresa May's willing to deal with them, but they're not willing to deal. And the legislature there is saying, no, as long as it's the deal it is now, we're not going to sign off on it. So March 29th is the day. So you could expect a lot of volatility in the market leading up to the end of March and probably the 1st of April as a direct result of the Brexit.
Okay.
We sometimes forget international things when we're looking at how our markets act, but I learned the hard way. You remember the Asian contagion?
I do, yeah.
Well, that was the first time I really realized how interrelated markets were. Before, you could have the European markets or the Asian markets closed down dramatically, and the U.S. markets would do whatever they wanted to do. But that particular day, everything changed. It was sort of the 9/11 of the financial world. I had $25,000 in open option trades that would have probably doubled my money by the end of the month. Instead, I lost every penny because for the first time we had a major impact on the U.S. markets from the Asian markets. So I learned my lesson.
And the options were on?
They were just long options on various different stocks and indices.
So it wasn't currency or anything?
No. And, 6 months later, they were all in the money, and I would have made out well. I wouldn't have doubled my money, but I would have made probably 20, 30%. So that taught me another lesson. If you're betting on a derivative, give yourself enough time to be right. I was greedy. I wanted to get the cheap options and cash in 30 days. And I would have been a lot better off if I'd paid up and bought 6 or 8 month options. But that was a long time ago. And I just remember it every once in a while.
Let me ask you this. What can you tell me about counterfeit money?
Well, it's interesting you should say that, because I have a warning about counterfeit money, and if you would make me presenter, I can show you some information I prepared.
I'll do it. And there you go.
Show my screen. PowerPoint. And here we are. So
that is a warning in red.
What would you think if you walked into a store and saw a sign like that on the wall? Would you tend to open up your wallet and check to see if some of the counterfeit money was in your wallet?
Yeah, I guess. I don't know. I'm trying to put myself in those shoes, walking into a place and seeing that sign.
Well, you'd probably ask, well, what does that mean? And, how would you tell the money's counterfeit? And you'd check it out.
If I was buying something, I would probably want to use exact change. So.
or use the counterfeit money to buy it with, right?
Well, there you go.
But I can save you the time, because I can tell you the money in your wallet is counterfeit. There's 3 really big dates as far as counterfeiting in the United States. There's 1913, when the Federal Reserve System was established. There was 1933, when we went off the gold standard, which gave the Federal Reserve System teeth, because the Federal Reserve Act passed in 1913 really didn't change a whole lot. It just meant that we had fake money backed by nothing circulating side by side with real money backed by gold and silver. So both are really important dark dates. And then 1965 was when we started counterfeiting our coinage. And this is all the government doing it. So if Washington was alive today,
that's funny.
I think that's the way he would look. So, of course, we're not talking about counterfeiting by gangs or by foreign governments. We're talking about a gang called the Swamp up in Washington, D.C., using the vehicle, the Federal Reserve System, to produce counterfeit money. And I know a lot of people think I'm a little extreme when I say things like that, but if you think about it, before 1933, if you had a $20 bill, you could go into any bank in the country and get 1 ounce of gold by law. It was an obligation of the government. It was demand money. the $20 bill today, the government's only required to give you 2 10s, 4 5s, or 20 singles. In other words, nothing real, just more paper. But as I've talked about before, it's just terminology. If you or I were to print bills like on the left with our own printing press and they look good enough, we could use them until we got caught, and we'd be called counterfeiters. But if people up in Washington do the same thing, print money backed by nothing, they're called the Federal Reserve System.
They are, and they get to charge us interest.
Yeah, that's the really, I started saying funny thing. It's not funny at all, but ironic thing. If by some miracle we were able to pay off our $22 trillion almost national debt, let's say China, who's the only one big enough to do it, were to loan us the money to pay off our debt, we would be in debt the next day because of what you just said, because the Federal Reserve has been given a franchise to print money, and then they loan it to the U.S. government, and we pay them interest. So we would start building debt back up again almost immediately.
Correct.
Interesting thought, huh?
Yep.
Another interesting thought is, if all the debt were to be paid off tomorrow, we wouldn't have any money, because our money used to be backed by gold and silver. Now it's backed by debt. So if there's no debt, there's no money. Do you ever think about that?
Maybe Gilligan was onto something when he was working with the seashells there on the island.
Yep. Good old Gilligan. I used to love that show. So government counterfeiting is summarized here. 1913, we started counterfeiting our currency. And in 1965, we started counterfeiting our coins. And the government tries to make the coins today look like silver coins. They're copper, but they put a plating, a very thin plating of cupro-nickel, it's called, and it's silver colored, and it makes people think that maybe they're silver coins.
Right.
But if you look at them closely, particularly on the edges, you can see the copper. Okay. All of this started with the Romans. The Romans started debasing money, and therefore they started inflation. They invented inflation. Roman politicians were no different than our politicians today. They had to keep people happy, you know. So although they were brutal people, they still knew that no matter how many soldiers you got, there's a whole lot more people out there. So they did things like the circuses and having lions eat up Christians in big shows and so on. And all that cost money. So they needed to get more money. They could only charge so much in tax. By the way, every society throughout history that's taxed its people more than 50% has gone under. That was one of the reasons the Roman society went under, and the other was the devaluation of the money. Well, guess what nation in the world today taxes its citizens more than 50%? America the Beautiful.
America, yeah. Well,
if you add up all the taxes you pay to the federal government, the state government, county government, city government, all the hidden taxes, the excise taxes, gasoline. I think gas is what, about 30% is tax now. They don't do it like on a retail store ticket. They show what you bought, and then they add sales tax to it. It's built right in, so you never see the gas tax. Right. You don't see a lot of other excise taxes. But
do they still print it on the side of the gas pump?
You know, I never looked, but I know that, you know, there's some people that pay way more. Wealthy people pay 70-80% of their income and taxes, unless they've got really good tax attorneys. And some people don't pay any federal tax, but they still pay the sales tax and land taxes and so on. But the average American pays over 50%. So that's what these Roman politicians were faced with. So they got creative. The people were clipping coins. These are Roman denarius. People were clipping off little bits of the silver from the edges and then saving them up. And after a while, you've got several coins worth of silver. And so the government started doing it too. And oh yeah, the actual Roman government did. But after a while, the people got wise to it. And so if a coin was clipped, they would only give people half value for it. So if you could get 2 loaves of bread for a denarius, if it was clipped, you get 1. So the government started putting ridges on the coins. And yeah, I've got a picture of it right there. You've seen this on gold coins, silver coins. They don't put it on copper or nickel coins because they're base metal. Reading, as it's called, is only put on precious metals. So they still put it on these copper coins faked out to look like silver today to give people the illusion that this is a real coin, a real precious metal coin. But it's not. But the tradition was started by the Romans and carried on by pretty much every government that's ever produced a mint to show people this coin hasn't been clipped or shaved. You know, you can take a knife and shave a little silver off. If you do, the ridges come off and it's very obvious that it's been messed with. But the main way the government did it, their debasing, was by melting down the coins as they came to the treasury and then adding lead to it. So we use that word debasing as a currency word today, but it's really a coin word because when you debase coinage, you're adding base metals to it like lead or copper or whatever, whereas the pure coins are silver or gold. So as the coins would come through the treasury, they'd melt them down, add a little lead to them, and debase them. 54 AD, just 50 years after Christ, their money was pretty solid, 94% silver. Our money, for most of the time that we had silver money, was 90%. So that's pretty much of a standard thing. Yeah, they always put some base metal in it, but it was an alloy. But 150 years later, they'd done so much adulterating of the money that it was down to 43% of a silver coin was silver, less than half. And then another 50 years later, there was only 1%. How do you like that for the government taking care of you?
Yeah, that's taking care of business, all right.
Yeah, but we've modernized the scam. You know, just like if you wanted to get around back in Roman times, you hop in a chariot. Today, you get on an airplane or a spaceship. We've used technology to modernize the scamming of our money. Here's Ben Bernanke, who's probably still the best known chairman of the Federal Reserve System. You might say
by far, Helicopter Ben.
Yep. Because he was always saying things like this. He says the U.S. government has a technology called a printing press, or today its electronic equivalent, that allows it to produce as many U.S. dollars as it wishes. He went on to say, all it takes is some paper and some green ink. So what he was basically saying to the American people is, your money's not worth anything.
Did he realize that's what he was saying?
Oh, I'm sure he did. I'm sure he did. But he didn't say it on TV or anything. He said it in a speech, a closed speech to the National Economists Club. And, of course, they all knew what was happening. But here's the interesting thing. In this speech, he admitted that the government creates inflation. Before this, Greenspan, the other chairman of the Fed, would say something weaselly like, well, you know, sometimes we have to allow some inflation because the danger of deflation is even worse. Well, he came around and admitted that it's in the interest of the U.S. government to actually create inflation because it, in effect, reduces the national debt. If you think about it, it does. If the national debt's 22 trillion and you reduce the value of the dollar by 10%, you just shaved off 2 trillion plus off the national debt. Make sense?
Mm-hmm. Mm-hmm.
So here's constitutional money. And I always challenge people, go read the Constitution. Whenever I speak all over the country, I bring pocket copies of the Constitution with me, and I pass them out, and I ask people, how many people here have read the entire Constitution? And maybe 10, sometimes 20% of the people will raise their hand. I'll say, well, how many have read it, say, in the last 5 years? And most of the hands come down because they might have read it when they're in high school. Today, the kids don't get taught the Constitution at all. And I tell them, look, there's got to be a reason why you don't read the Constitution, since it's the most important document in our country besides the Bible. And I think it's because it takes too much time. And most everybody raises their hand, yeah, that's the reason. And then I say, it takes 45 minutes. That's how long it takes to read the Constitution. And I make them raise their right hand and swear that they will read the Constitution within the next week, you know. But if you go to conservativetruth.com, you can hit Control F once you're in the Constitution. We have the Constitution, the Bill of Rights, the Declaration, all the major founding documents easily accessible right on the website. And I tell them, go there and do Control F and then type in any word, F for find, type in any word that you want to, anything that has anything to do with money, and see what you come up with. So you can search for credit, money, currency, gold, silver, dollars, payment, whatever you want. And basically you find two things: that only Congress has the power to issue money. And number two, they use the word coin. Only Congress should have the power to coin money. So the Federal Reserve is unconstitutional on its face because Congress, the federal government, is not issuing the money. They've subcontracted out to a private institution. Don't be fooled by the name federal in the name Federal Reserve System, because it's not federal. If you go to Conservative Truth, look in the archives, read the article, The Non-Federal Fed. Okay, there's nothing federal about it except its name. But what about coining money? Is it, you know, coining, that's old-fashioned. The only reason the Founding Fathers said that Congress should coin money is because they didn't know about paper money. We don't really know much history in this country about our own history or about world history. Chinese were printing up worthless paper money made out of rice paper back in 600 AD. They got the people to bring their silver and gold coins in and get paper money for it because it's easier to carry around.
Sure.
And at first, yeah, at first it was equal.
Gold bar and stick it in your back pocket.
Yeah. Oh, I kind of like it. You know, I always carry a gold bar around with me, but no.
For protection.
Yeah, really, it's pretty heavy.
Yeah.
A kilo bar is about 2 pounds. But anyway, they got the people to bring in their silver and gold coins, basically for safekeeping and the issue paper money. And it was 1-to-1, so it was legit. But then they figured out that most people didn't ever come and get their money. They never brought the rice paper back and said, hey, I want my coins back. And so they started issuing more and more and more until China had a hyperinflation back, 1,400 years ago. So we certainly knew about paper money, and the U.S. government had issued a paper money called the Continental Dollar that hyperinflated and became totally worthless. So this is why in the Constitution they said only silver and gold are money, because after the Constitution was issued, then they started printing gold-backed and silver-backed notes that you could take in to any bank and get actual gold and silver coin for. So people traded in their Continental dollars 100 to 1. They were happy to get $1 US backed by silver for every 100 Continental dollars, because the Continental dollars were pretty much worthless. Okay, you can see that this is demand money. Most of you have never seen one of these unless you go to a coin show or a shop that carries old money. You'll never see one. But look up at the top. This certifies that they have been deposited in the Treasury of the United States of America. Then go down to the bottom, $20 in gold coin payable to the bearer on demand.
What does silver certificates say? Do they say the same thing?
Pretty much, okay. But it says payable
over the years.
Payable in silver. I'll show you a silver certificate here in a second. They use silver for the smaller denomination coin bills. But see the gold seal there? Mm-hmm. This certificate is a legal tender in the amount thereof and payment of all debts and dues, public and private. So it was a gold certificate. And the certificate on the Federal Reserve note, as you see there, is the black seal of the Eel Empire. But that's what I call it anyway. And it doesn't say anywhere that you can get anything for it, does it? So the only thing you can get for it, as I said earlier, is more paper. You can go to the Federal Reserve banks or any banks and turn your 20 in and get other denominations of paper, but you can't get anything of real value. Now, politicians learn to hate these. At the top there, you see a gold certificate. It's a $50 one. Mm-hmm. And you would have gotten 2.5 ounces of gold if you took that in and paid for, paid for it. Down at the bottom, it says pretty much the same thing. This certificate, this certifies that there is on deposit in the Treasury of the United States of America $5 in silver payable to the bearer on demand. So they didn't like demand notes because then people could demand what is owed to them. Instead, we were left with basically nothing. So the Federal Reserve System is a politician's dream come true. Do you know how FDR got elected 4 times?
How?
Printing money. Once we went off the gold standard, he could print as many dollars as he wanted to buy as many votes as he wanted to. No president's ever been elected more than twice. He was elected 4 times, and the sucker would still be president today if he hadn't died in office. Because he could just keep on printing money. Politicians love that. They don't really lust for money so much as they lust for power, but money gives them power. So
yes.
Let's talk real quickly about the attack on our coins. Until 1964, our coins were 90% silver. From 1965 on, the $50 was 45% silver. They cut the silver in half. But all the other coins went to 0. And by 1969, all the coins were 0% silver. Nobody, I've done a lot of research on this. I can't find anybody who can give me a logical explanation why the dime, the quarter, and the silver dollar went from 90 to 0 in the same year, and why they issued for 4 more years silver dollars that were half silver. But that's the way it was. But by 1969, or actually by the end of 1969, there was no more silver in any of our silver coins. Now, I mentioned the article, The Non-Federal Fed. I recommend it. It's a short explanation of how the Federal Reserve started. If you want to learn more, read The Creature from Jekyll Island. It's the classic on the Federal Reserve, how the Federal Reserve was created in secret and it was created unconstitutionally. It's a fascinating story. I would also recommend In the Fed by Ron Paul. Ron Paul's not an exciting reader. It's not like riveting or anything like that, but it is absolutely true. And he gives a modern day perspective on how we can end the Fed. Remember when he was running for president, he had young people out there chanting, "In the Fed, in the Fed."
Which is interesting because most young people think that, you know, the Fed is as federal as Federal Express.
Well, they're right.
Yeah, yeah, they are.
So
on both counts.
Right. So I would really recommend both. If you want to understand money and the danger we're in as a country and the danger you're in as an individual and your family, read these two books. Okay. So as I said at the beginning, the result of counterfeiting is hyperinflation, because as the money becomes worth less and less, eventually it becomes what? Worth less, right?
Worth less, of course.
Yeah. So no fiat currency in history of the world has ever survived. We hear a lot about Germany, Argentina, and Zimbabwe, and 24 other modern nations that have experienced runaway inflation, also called hyperinflation. Today I'd like to talk about France, because we don't hear a lot about France, but I think it has a lot of lessons for us, because its hyperinflation was more similar to the U.S. hyperinflation that we experienced in the early days of our country. In the spring of 1789, the Assemblée of France, which is like their legislature or Congress, issued 400 million livres of assignats. So the assignat was the name of the currency. The livre was the denomination. By fall, just 6 months later, they had issued another 800 million. But there was somebody smart in the legislature that said, no, I'm not going to vote for this unless you say this is the end. No more. No mas.
Now, it's no small feat in 1789 to issue 800 million of anything.
That's true. They mostly issued them in large denominations, very large denominations, because their money had become so worthless. And so they just kept on issuing it. But somebody was smart enough to say no more than 1.2 billion. So at that point, they'd already issued debt. The 400 and the 800 were 1.2 billion. But despite that becoming law, 9 months later, they issued another 600 million. And then, unbelievably, from May to December of 1791, they issued another 1.3 billion. So just in those 6 months there, they issued more than the total that was allowed, and they were already at 150% of what was allowed. So now we're at like 250% of what the law says you could do. But don't worry about it. You know, if you're making the laws, you can break the laws. But then it got worse, if that's even possible. Prices kept going up, but wages didn't keep up with them. So in 1793, mobs were in the streets and they plundered 200 stores in Paris. So price controls were imposed. It was called the law of the maximum. So there were maximum prices set for certain goods and services. Well, we say, well, that's stupid. Who would ever do a thing like that? You know, if you lock in prices, you destroy the whole system of
free markets.
Yeah, free markets. Well, guess who did that in the United States? Tricky Dick Nixon. Okay, Richard Nixon imposed not just price of goods and services, but also wage controls. Okay, wage and price controls. Of course, they didn't work. They made things worse, but we've done it right here in this country. So, no big surprise that output decreased because nobody wanted to work for worthless money. So there was less goods and services being produced. Therefore, there was less available. So they had to do rationing. So, you know, it snowballs. You start with one thing, you know, issuing worthless money, and the next thing you know, you've got rationing. Then it got really bad because they issued these legal tender laws. And what they said was you could either get 20 years in prison. In their prisons back then, really this is better than their prisons. They were basically holes in the ground, dungeons with rats crawling over you. You're sleeping on the floor in puddles of water. They would throw you a scrap of bread once a day. I mean, they're really awful places. Not like our federal prisons today where the guys have color television and workout rooms and air conditioning and all that. You could get put in that prison for 20 years for the crime of saying, I don't want these paper monies, this paper money, the assignats. I want you to pay me in gold and silver coins. Go to prison.
That was illegal to request gold or silver?
Yeah. They made it illegal. It's called a legal tender law. In other words, you're saying this is legal tender, that's not. So if you requested anything other, if you wouldn't take the worthless government money, then they threw you in prison for 20 years. That didn't scare the shopkeepers enough. So then they said, okay, we'll cut off your head. That would scare me, right? That guillotine looks pretty, yeah, looks pretty bad to me. But, you know, they risked it because they had to feed their kids. And the worthless money, you know, people wouldn't take it. And then, unbelievably, it got even worse. By 1794, there were 7 billion livres. Remember, maximum of 1.2 million.
Right.
By May of 1795, there were 10 billion. And by 1796, when everything fell apart, it had gone up to 45 billion livres. That's 36 times the maximum set by law just 7 years before. So at this point, the assignat was worth 1/4% of its face value, or you might as well just say it was worthless. So when that total reached the 45 billion, the public officials came out in the square of Paris and they took the printing plates for the assignats and they destroyed them. They smashed them. They said, no more. You're right, people. We understand. We hear you. You're rioting and killing and looting and burning. You know, we get it. Okay. So we're going to give you a really, really good money called a mandat. But it was just another paper money. And this time, instead of 8 years, it only took 2 years before these lost 97% of their value. By the way, that 97% is an interesting number because our dollar, our US dollar, has lost 96% of its value. But it took over 80 years. What's the difference? Well, the difference is that our US dollar is the world reserve currency. Problem is, we're getting very close to losing that status. It used to be 90% of all the money on reserves as interbanks was US dollars. Now we're down to 60. If we drop below 50 and some other currency, maybe a gold-backed currency, takes over, then the standard of living in the United States is going to drop dramatically. But anyway, to continue the story,
so the livres and the mandats, how did they get into circulation? Did the people buy them with gold and silver from the government?
Yeah. I left out part of it because it's a little tricky, but basically a bishop now, right, turned politician, he came up with a solution for all the debt that the country had. The king had just run massive debt up, just like King Obama did. Doubled our national debt in 8 years. So what the bishop suggested was that the government seize all church property, right? And then sell them to the people for assignats. But they couldn't use gold and silver to buy it. They had to buy assignats with their gold and silver, and they used the assignats to buy the land. Okay? So it's a very tricky, sneaky process. But that's how they were able to get the assignats out there. And by the way, I've taught on this many times. You're the first one who was smart enough to ask that question. How did they get them out into circulation?
Well, I'm flattered. Well, because I'm thinking of the government.
Ring the bell. Ring the bell.
I'm thinking of the government sitting there just storing up all the gold and silver.
And that's what they did.
Let's trick the people into giving us. We don't have to go in and take it by force. We have a clever idea. They'll just hand it over.
Yeah, it was a gold confiscation like ours, only much more sneaky.
Voluntary, yeah.
Yeah, we're not the only country that's confiscated all the gold of the people. Back in 1933, FDR confiscated 40% of the wealth of the nation. So anyway, they'd learned their lessons, so they destroyed the printing press plates for the mandats, and they said, hey folks, great idea. We're going to repudiate the paper money, and we're going to start a new monetary system based on gold. Well, you idiots, 10 years before, you had a gold-based system, and everything was fine, and now you had to come up with all this fiat money, this paper garbage. So there's a lesson here, and I hope we learn it.
Well, yeah, it's time to go on a gold system because now they have all the gold.
Yeah.
He who has the gold makes the rules. Okay. All right.
Yes, sir. You're right.
Okay.
The United States can learn from the hyperinflations of Germany, where it went from 4 marks to the dollar to 4.2 trillion marks to the dollar. Or Argentina, where things got so bad that the inflation was so huge that the employers, instead of paying people twice a month, had to pay them twice a day because they paid them at lunchtime, and by dinner time, the money had already lost 50%, 70% of its value. Or Zimbabwe, where the dollar was almost at parity with the US dollar, and 4 years later, they're printing the largest banknotes ever issued, $100 trillion banknotes. I used to give those away when I traveled around speaking different places. They used to call
me 100 trillion.
A whole bunch.
A whole bunch, okay. I'll take that.
So we can learn something from these other nations.
But I'm not sure.
Well, let's see. 1,000 would be 3, 1,000,000 would be 6, 1 billion would be 9, so 1 trillion would be 12.
I was basing it off of the 9.
I always have to use my fingers.
Right.
Okay. It's not too late for us to save ourselves from being ruined by inflation, but we don't have much time. I mean, we're getting down to the wire here, folks. Our problems, just like France's and all the other countries, almost every country in the world has gone through hyperinflation sometime. Started when we began issuing worthless currency, when FDR took us all the gold standard. It's not possible to put the nation back on the gold standard. Now, you might think I've been advocating all this time for the gold standard. I would love it, but I'm a pragmatist. Number one, there's only, if the Federal Reserve has all the gold they say they've got in the basement up there in New York, and if the U.S. Treasury has all the gold they say they have at Fort Knox, it's questionable because it's been decades since they've allowed anybody to come in and audit or inspect. But let's just say that's all there.
What's the reason for not allowing audits and inspections?
Security.
Security? Oh, okay. All right.
Yeah. The amount of gold that we supposedly have would only back about 3 to 4% of all the money we've got. So the only way that we can actually go back on a gold standard with the gold we presently have, and we got more than anybody else, would be for a crash to happen first. Just like the continental dollar crash from $100 down to $1. The other problem is the politicians. In order to go on a gold standard, the politicians would have to say to people, no more free stuff, okay? The only people who are getting welfare are the people who can't work, not the people who don't want to work. I guess you saw that Alexandria Ocasio-Cortez's statement that she wants the government to pay a living wage, including vacations, family leave time, so on and so on and so on and so on, insurance, health care, for every person in the United States, including those unable or unwilling to work.
Yeah, the unable, I'm all for, count me in. The unwilling, yeah, I gotta think twice about that.
Well, she got blasted so hard that she took it off her website, but somebody was smart enough to do a screen grab of it. But how is a politician going to get reelected when he tells people no more free stuff, when half the people voting are living off of free stuff? So I don't see us going back on the gold standard unless there is a complete crash of the economy. But we can protect our families and our businesses, our churches, our ministry. Whatever you're in charge of, you can protect it by putting it on the gold standard. What does that mean? It's not passing legislation. You simply buy gold. And I'd be glad to help you, advise you, show you how to do it. If you go to CFRN Gold, I'll send you information. You know, all wisdom comes from the Bible, right?
Amen.
So the Bible says in Proverbs 13:22 that a good man leaves an inheritance for his children and his grandchildren. So what kind of inheritance are you going to leave? Lands and gold, hard assets that you can hold in your hand, or crushing debt resulting from having nothing but paper assets? And basically the bonds of slavery, because debt is slavery. Again, the Bible says the debtor is slave to the lender. So here it is, CFRNgold.com. If you go there, you can get the free gold education starter package, and I think you'll find it fascinating. Everybody that's read it has sent back compliments on it. Even if you don't have any money to buy gold, at least understand it so that when you do have some money, you'll know what to do with it.
That's better than William Devane.
Thank you.
They run a lot of commercials. A lot.
Yes.
CFRNgold.com. Go there, get your free gold education starter package.
Okay.
Did I get it right?
You did, sir.
All right. I'm going to take this. You're done with the you're done with the screen, right?
Sure. Take her back.
I just want to grab it here, and here's gold. Okay, we're following through that 50% fib retracement on this last leg up. We are in the J contract. Let's look at the S&P.
I'm going to go ahead and leave you because I have a phone call I have to make, but
okay.
It's been great being with you today.
Okay. I'll talk to you perhaps later today.
Okay. God bless.
Okay, bye-bye. Okay, here we are back on the S&P. We talked about 2778 to 2776. Okay, we got through that area. Now we've got 14 minutes left of this 30-minute candle. I'd like to see it close. I'd like to see it close down below these lows. We've still got a ways to go here to the 6162. And we're not free of this area. Okay, got to deal with this. Got to deal with this. And then if you do get to the weekly trading zone below, well, look what happened up above. Ran up, tagged it, came back, tagged it, spiked it, still came right back to the same spot. So could we go down and touch this 61, 62, pull right back up and still be stuck in the same spot? Yes, that is correct. That is absolutely correct. In fact, it might help to build a right shoulder there. Head, shoulder. Now, you could call that a shoulder, you could. Or it could come back up, flesh it out a little bit, and drop. Okay, this then becomes the neckline. Imagine that. So there you go. Swing low so far, 27.73.50. From 27.78 to 76. You know, that's just a little pinch right out of this middle here. Now, let's see what happens. These are the lines in the sand, 91.92 overhead, and we spiked it, but we didn't hold it on a pullback. We held it for an hour, right? For an hour we held, and then we didn't. Now, you've heard me say that one of three things happens at a weekly trading zone. This is a rejection. Price runs up and it's rejected. Okay? That's the third most likely, or second most likely. The most likely is this consolidation right here. Second most likely is the rejection. And the third most likely is the slice. Okay? With the slice, you slice through like it's not even there. Pull back, in this case, into the zone to confirm good support. And then from 92 off you go to 98, 6-point move. But then the defining part of the slice is when it pulls back to confirm good support to continue in the direction of the slice to the zone overhead. And it failed. Pulled back, consolidated, leg, retrace, leg, retrace, leg. And we're in a pretty good leg to the downside. Do you have any questions? Put them in the chat box. I don't know, Wayne. The Rothschilds, I'm more than familiar. Don't personally know the folks, but certainly know of them. Go to a good word for the day. The hour is late. Okay. Now, sometimes in trading, we suffer from what's called analysis paralysis. We got so many things counting and clicking and clocking on our charts. After a while, it's difficult. It's difficult to see price. Yeah. And so, at some point, you have to figure out when you got 9 things telling you to go long and 9 things telling you to go short. What are you going to do? Well, the first thing is you need to get rid of about 90% of that stuff that's cluttering up your screen. Because you're just remeasuring and resampling and reallocating stuff over and over and over. And it's a mess. I can promise you less is more. And if less isn't more, it's just as good as more. All right. So with all that noise on the screen, on the chart, how do you learn to make decisions? How do you learn to be decisive? Not derisive, derisive, but decisive. James 1:8, a double-minded man is unstable in all his ways. If you're afraid to make a decision because you might be wrong, And when it comes to trading, you got to get that out of your head. It's not about being right or being wrong. It's about profitability. It's not an emotional thing. If you're afraid to make a decision because you might be wrong, James 1, 5 through 8. If any of you lacks wisdom, let him ask of God, who gives to all liberally, and it will be given to him. But let him ask in faith with no doubting, for he who doubts is like a wave of the sea, driven and tossed by the wind. For let not that man suppose that he will receive anything from God. He is a double-minded man, unstable in all his ways. Now, President Reagan enjoyed telling the story of how he learned to make firm decisions. When he was a boy, his aunt sent him to a cobbler to have a new pair of shoes made for him. When the shoemaker asked, "Do you want a square toe or a round one?" He hemmed and he hawed, and so the cobbler said, "Come back in a day or two and tell me what you want." Later, the cobbler saw Reagan on the street and asked what he had decided about the shoes. "I haven't made up my mind yet," he answered. "Very well," the cobbler said. "Your shoes will be ready tomorrow." When Reagan got the shoes, one had a round toe and one had a square toe. Reagan said, "Looking at those shoes every day taught me a lesson. If you don't make your own decisions, somebody else will make them for you." Now, here's the worst case scenario. If you get it wrong, you'll learn what not to do next time. So, here's the bottom line. To succeed in life, you must pray for wisdom and then make a decision. That's our good word for the day. Reminder, workshop tonight at 9 p.m. Eastern. I'll see you there. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell. Tune up on bell 3.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with the licensed securities broker or financial planner before making any investment decision.